Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, we're going to go over those macro Monday concepts as well as the sea of green on the crypto bubbles. And guys, I just want to thank you for being supporters, for liking and subscribing to the channel. It really does help motivate me. So let's just get straight to the charts, guys. And as you can see, a lot of altcoins are pumping off as Bitcoin is slowly starting to, just slow that fall that has been quite scary for the last couple days. And it is slowing in the area that I was suggesting. Now, one of the things that could be causing this, in fact, shaking up all the markets, is that it's earnings season. Okay, so you can see all these dates on these various, stocks, and you can see, of course, that all of these companies will be sharing their earnings and sharing their financial statements in the coming week or so. Now, if the recession narrative has been dominant, then what we'll find is that earnings are bad. And since the stock market is at a key inflection level that it needs to surpass bullishly in order to get just that pop, that bull run, if earnings are bad, that could cause a very serious rejection, which then could send markets tumbling. And of course, Bitcoin could go along with it. And perhaps being the risk on asset, maybe some investors are front running that, trying to get their money out of the markets early on. Since stocks move slower than crypto, they're kind of front running each other in the crypto market, and maybe that's why we've had that massive pullback on Bitcoin. That's just one possible explanation. The other explanation might be that the Fed has basically solved the banking crisis for now, and so that argument that Bitcoin is the alternative to the US dollar because the banking system in the US was going to collapse, right? It was going to be devastation and we were going to have a Great Depression. Well, that never happened. And so maybe people are just realizing, maybe I made good money on my Bitcoin and it's time to take profit as we are at resistance. Of course, these are the big concepts that are out there. And one thing that we do have to worry about is that if if Bitcoin decoupled from the stock market because of that worry about the dollar, then if the worries about the dollar were overblown, okay, like if the dollar is just fine, like it's just chilling, right? It doesn't really care what China does, okay? It's the big dog, right? It's the US dollar, and it's going to take like 10 years for that, the Chinese dollar and these BRICS nations to do anything meaningful, more than like 5% of the market, okay? So the dollar is going to continue to dominate. And if the dollar's okay, then it may be that it was overblown a bit, and so now the Bitcoin may end up recoupling with the stock market. And should the stock market take a tumble, then we could see Bitcoin tumble along with it. Okay. So, all of this is to say that we are in a stagflationary era where we do have this recession narrative and we have inflation narratives, and we're being attacked on both sides, both by the recession and then also by the Fed, which is relentlessly increasing interest rates. And if the Fed thinks that it needs to, increase interest rates more, then it might just do it. The market has priced in 3 rate cuts, and so that would be pretty bad for the market. And the dollar would renew its strength, which of course Bitcoin is traded against, and that would have Bitcoin coming down even further. And so, guys, these are just the juggling act of big concepts that we need to consider when we consider the bearish perspective. Because although I'm bullish, personally, our feelings don't matter, right? Only the chart matters. And so let's just, just for a second, try to see what the bears are seeing on the chart. And the first thing that we could just suggest is that, we are at this kind of macro inflection point, not only in the stock market, but also on Bitcoin, where you can see that we just have this super heavy resistance in this area. So if this is a valid point of resistance that we can't just push through, and it's true, we might not be able to do that, okay? I did see the possibility for us to push up, into this kind of 35,000. This is a lot of chop. This is a lot of chop. This is a lot of chop. This is the much heavier top of the market. But this is also extremely hard to break through. And so that's also a valid point to be using on some type of a trend line. Let's just consider what this on a log scale, because of course we're talking about parabolic action, might look like. And let's just draw a parallel to the bottom where we can perhaps reach a low point. And hey, look, it wasn't the 15.5, it was actually over here, somewhere around 17.7 was the bottom there, okay, 17.7 on this parabolic diagonal channel that we may be considering just to entertain the notions of the macro bears, okay? And now the macro bears are going to make this type of an argument. They're going to say, hey, bulls, check it out. Okay, yes, we broke into, we tested the bottom of this channel. We essentially established this resistance back while we were retesting the bottom. We broke in. We basically set a mid channel here. We reached the bottom, and then we got to the top. We tested the bottom. We're now testing the top. And where would that suggest that we go next? Well, the bears would say it means that we're probably going to explore the bottom again, somewhere between, of course, we can't fall just straight down. So there has to be some type of diagonal here, right? So it's something just the bloody massacre would take us down to 10K, but a slower descent would actually take us lower, right, as low as 8K. So they're seeing anything in this kind of range of like 8K to 10K as some type of a possible place where, this macro channel could get rejected harshly, right, and bring us down as low as their wet dreams at $9,000 ish. Okay, so you're hearing that $10,000 mark just talked about over and over again. And there is some validity to this. Okay, like if you're in a channel, then the trend, which is this is a downtrend, the trend is your friend until the end. And you don't know when it's going to end. That's the problem, right? With trends, you don't know it's going to end, but it's very reliable while you're in it. The only time it's not reliable is at the end. So the bulls would say, look, you've already tested the bottom of this channel once, twice, 3, 4 you can consider, and even 5 times. It doesn't make sense to test it a 6th time, okay? This was once. Usually you test something like 3 times solidly. This was once, twice, 3 times, and so I don't think that we're going back to the bottom of the channel. But maybe, just maybe, you're right about the mid channel. Maybe there's a mid channel that we could test because we've only tested the mid channel once, right? Twice, 3 times, maybe 4 times, but not in a way that was supportive, just only in this trend. And so really only one time did the mid channel act on its own. And every other time it failed to act as a mid channel, it acted just kind of like a slow point, right? But what if we've now tested this channel enough that this mid area, right, which you can see aligns right here, right, with this this bounce right here. It aligns with kind of this deviation and then the pump up, this deviation and the pump up, this deviation and the breakdown, right? This deviation and then the breakdown, right? So this mid channel is actually very significant. And the bulls would say, maybe we're only going to come as far down as 17,000. I call them bulls, but this is just going to be kind of the moderates. Let's call them moderates. Okay, the moderates would say, no, we could double bottom on this chart. Okay, we could double bottom, but that probably we're not going to be breaking this 16,000 to, let's just say, $18,000 range, that we do have support here because of this mid channel. And furthermore, we can create a zone out of this where let's just bring this to the top here because this is where it maxed out on its first test, and then let's bring this to the bottom, not too far. There we go. We see some support right here. We see this wick right here. So yeah, let's use that wick. Oh, you also see this wick right here when we did this bottom here at $16,000. And so this looks like a nice mid kind of zone for us, right? And so let's go ahead and just distinguish that just a bit. And there you go. There you can go and see the range that we might be able to occupy, assuming that there's some type of weakness or assuming that there's some type of support. Maybe we could bounce off of this area at $20,000 to $21,000. Okay, let's just push down, bounce off $20,000 to $21,000 right off the top of that thing. Okay. We've bounced off of these areas before, like we had a little bounce here, so we could bounce on this side of it also, maybe a little deviation, and then nice strong bounce. Or maybe we could push through, get to that center at like 16 to 17, right? Or we could push to the other side, and then as the lowest that we would be talking about is 14. And then what would the moderates say? Well, look, we've already tested the bottom of this range enough. We're in the middle of it, and so we're going to get a nice bounce, and then this time we're going to be accepted, right? This time we're going to be accepted. We have that resistance over here that we've been talking about that's been rejecting us. It's probably going to reject us again. We're going to test the breakout, and then we could do that a couple times, but then we could probably go after that. Like we're just going to go after that. Okay, and so yes, we're going to take this detour, but it's not going to be as bad as you think. Okay, we have this range here, and then the middle of it or the top or the bottom of that range, and then this thing's going to get ready to fly. So you guys who are targeting 10K, you're going to be sitting on your money again. You're going to be sidelined once again because we're not coming down there. We've already tested this range. It's time to retest the mid-range bullishly, just like we tested it bearishly over here. And then this is going to kick us up just like it was coming from the downside over here. And it's essentially the inverse. It's essentially the inverse of what happened, right? Falling down, go to the top, go to the middle, and then break out. Make our chart right from the bottom to the top to the middle, and then break out. Okay, and then do a little bit of a retest maybe, and then go. Okay, and so that would be the bullish, the kind of moderate perspective that still held the market structure intact. And so I wanted to put that out there as a possibility because no one's discussing this one. Okay, no one is seriously discussing this one, and I just wanted to show you why structurally it can make sense. Now, alternatively, we have a super bullish scenario, right? Which could be that we just come down, and this is what the bulls want. The bulls just want to come down to either right where we are, right? And then we make this effort to keep going, which is possible. None of this is unreasonable. And then we have our epic run, wherever we end up going, right? Wherever we end up going, we have our epic run after this one and put in a little bit of an accumulation wedge and just off we go, okay? No retesting back down here. Just get that out of your mind. And this is what the bulls want to do, okay? Now, the bulls, I know a lot of bulls, and they would admit that, they're willing to concede as low as 25,000. They don't see us going below 25,000. The most generous ones are saying somewhere between 21 to 23,000. So they're basically saying just a short trip. Okay, yes, we'll consider the midline, but just a short trip, not one of these extended vacations in these areas. Just a short trip down there, and then a kind of a quick reaction, And yes, maybe we get some bounces and stuff like this, and it's going to be difficult or whatever, but we're going to start attacking this line and then pushing up, and that's because the dollars are going to keep falling and the banking system is going to get weaker, and so that kind of dollar alternative argument for Bitcoin is going to get stronger, right? Like that's what the really idealistic one's belief, right? The Bitcoin is going to replace the dollar kind of thing. And so this is going to be part of that narrative. Or that the stock market is going to collapse. We're going to have, maybe not a Great Depression, but we're going to have some type of collapse in the market. And, Bitcoin's just going to be one of those safe havens like gold or whatever, and that it's just kind of changing its nature. It's being accepted now as something on the macro to like store, store wealth in. And they see that happening because all those overseas countries that do want to decouple from the dollar, just because they feel a little bit under control by it, then and they may be the US's enemies, right? Like Russia and China. They feel under control, but then maybe people surrounding those economies are going to be more open-minded to holding Bitcoin because they'll never get cut off from Bitcoin, whereas they can be cut off from the dollar. Okay, so I'm trying to present both sides and also a midway, right? So these are the scenarios that we're looking at. But either way, right, any of those three ways, we are looking at resistance here and this pullback. And so it was always in the cards. Okay, there's nothing bearish about this pullback. It was always in the cards, and every scenario suggests that eventually we accumulate and go back up past these levels. Okay, there's no scenario in which case they're just saying, well, this is just going to die. Okay, so I just want to make sure that people understand that. And I know a lot of you are bears because you missed this bottom, right? And you are hoping and dreaming about those lows, which even I hypothesized for a while. I was one of the biggest bears trying to protect everybody on the way down. But when I saw this structure being developed, that was a very bullish structure. It's very obvious, okay? To anyone who's been trading for a while, it's a very obvious structure. Get in on it, you trade to the upside, and if it breaks down, then okay, we go to the downside, all right? We did have this kind of mid area. No worries. Let's keep going, right? That's how I could continue to be bullish. But there is a very strong argument here, and we just do have to be aware of that. Just going to double check my time on this video really quick. And yep, we are getting a little bit long in the tooth. So there you go. That's your Macro Monday. These are the concepts that I want you guys to hold in your head. And what we're going to do is just put those away for a later time, which we can revisit to see, what actually happened. Now, guys, just on a more practical level, let's take a look at the 6-hour chart, because the 6-hour on Bitcoin tends to be very reliable. Okay, very reliable for turnarounds when we get them. And you can see it like down here, you could see it down here. Anytime you have a major dip on Bitcoin, the 6-hour chart is far more reliable than the 4-hour chart. I'm starting to see things on the 6-hour that does suggest that we might have the possibility for a mean reversion to the upside, perhaps even as high as this $29,000 to $30,000 level, which if we did flip would put bulls in control on the 6-hour chart. Of course, we're not really there yet, but we are getting the first candle of that possibility. Okay, so let's just flesh this out a little bit more. And what you can see is that we do have to capture this momentum pool, which is very, very narrow. Okay, very, very narrow. But we're actually doing it. We're actually exploring the pool. We've actually come back down to test the general continuation line. We grabbed it after being rejected at this area, and then we pushed back up. And now we just have to take out this hold momentum level at 27,670. So this hold momentum level is actually the push to the downside. And so if we get above it, we're going to invalidate it, right? You can see, look at these candles. They closed right at my level. I had this mapped out before this was done. Sorry, it just took me a while to make this video. And, I wanted to have lunch. It's Sunday and all that, right? And so, guys, we do need to get above this level and hold on to it with a nice solid candle close in order for this continuation to the upside. And the bears have actually lost some momentum, but they are still going to be in control as long as we're under 28,000 and $65 on the 6-hour chart. Okay, so capturing this area, capturing this support level, you can see the gray bar, is very important. Now we are getting a little bit of a rejection there. If we came back down and made just a quick kind of like a blurb to the downside, I really wouldn't worry about that too much. It's going to be a W structure, and then that could be what ends up sending us. Okay, if we make some type of bullish divergence on the RSI or whatnot, that could end up sending us up. But again, we do have to get above that 27,670. And then really what I want to see for us to be out of it is the 28,065. If Bitcoin is able to pull above 28,065, then I would say, yeah, your alts are probably going to go screaming. Okay, they're probably going to go screaming up because everyone's going to think this chart is turning around. And then we're going to get a big test at 28,700 and 35-ish. And then our next test is going to be around 30,000. Okay, if we get over that, then perhaps we could continue with this run to the upside. But otherwise, we're probably just grabbing this liquidity, and this is all just a a mean reversion, just a just coming back to the average essentially. Let's throw on some EMAs just to see what we look like here. Yeah, and you can see we are getting a little bit of a squeeze. It's not very convincing. We're still under the 9, and we don't really curl the 9 up until we're above 28,000. So again, like exactly what I was saying. Oh, wow, I didn't notice that the 200 was here. Yeah, we're sitting on the 200. It's right at my volatility pivot of 27,000, and so we will have that volatility pivot at our back as long as we're above that 27,285 level. And look at this. This is just beautiful how this EMA is aligning with my volatility pivot and the bottoms of these candles. It does suggest that we have support here, so that again, like even if we have a little bit of a double bottom or something, and it could be shallow, right? It doesn't have to be that deep. That we could keep going. Now we could have some type of flash wick down there, but I really wouldn't want to stay under here because we're going to break that nice 200 EMA, and I really don't want to do that. It would suggest continuation to the downside, and having that volatility pivot over our head would suggest that any random volatility in the market could just slap us down, okay? And so, guys, if we want to get that squeeze to the upside, we really do have to capture this area around 28,000. And right now, we're just kind of front running it, okay? We're just kind of front running it. Let's see here. I think that we can take a look, just take a peek at some of the indicators on the 6-hour there. And you can see, of course, that we do have a nice bullish signal here. Now, sometimes these signals don't work. We got a signal right here. Yeah, we had a little tiny dip, but then we pushed up higher, and so that was a bearish signal. They don't always play out, right? Like we could drop lower. But what I do like is that our Stoke is bottoming out and that it's pushing back up above the ski threshold that I have here at about 10. Okay, I like that level. For if we break above it, then I do consider it a valid signal. We're almost there. And again, like I said, the 6-hour, I find it super reliable. I also like that we're contracting on the 6-hour, which suggested that we're going to go either sideways or up because we're going to have a mean reversion according to this contraction. And then on the RSI, we are fully in that bearish control zone, as I mentioned, on our key levels, but we are trying to tackle this EMA on it. And should we be able to hold that, then we could perhaps pump to the top of the bearish control zone and pop up, maybe try for that middle section or even work our way on there a little bit more. If I had to draw a trend line here, it would look something like this. And so, you can see we're not out of the woods yet. Probably have to pump up here, do a little retest or something, and then things will start flying, okay? But you can see we're building the structure necessary to have that possibility. And so I don't want you guys to be perma bearish right now, okay? I just think maybe there could be another dip, maybe there'd be a double bottom. We could test the bottom of this channel. The 300 EMA is down there. We could test the 300 if we do break the 200. It's not going to be, the end of the world. We could test that. And then we would just need to get a nice bounce up. Okay, that's all. And so, yeah, guys, that's what I'm seeing on the 6 hour, and I do find it to be a very reliable signal. Okay, let's go ahead and jump to the daily. And what you can see on the daily in contrast is that we don't have that signal. Okay, we don't have that signal over here. And just to show you like how not perfect this, these oscillators are here, I had a top signal for the market over here, and look how much we ran up. Okay, like literally from 21,000 all the way to 31,000. And so like you have to take these signals with a grain of salt. You have to put everything together, the volatility, the momentum, the price action, right? All of these things have to be added together. But what I am seeing on the oscillators is a push down is not finished yet. It wants to consider that it might be finished, or it might get a nice bounce, but I would think that just based upon the daily, we might see something like this, okay, and then we get the real bottom later on. Okay, so the daily does not look fully reset to me. Okay, this is a much better reset. This is a much better reset because at least some of the lines tagged it, and then we continued on our way. We continued on our way. This one, I don't see anything maxing out. Okay, and there's about 6 different indicators like stacked on top of each other here. These are not all the same indicator. Okay, there's like 6 of them stacked on top of each other, and I've merged them into 2 that basically I can put on my chart just to save space. But in general, the jewel here is saying not 100% ready yet. And also on the daily, we can see that we really haven't, the EMA hasn't caught up with us, and also we really haven't built a lot of structure here. The EMA is above the midpoint. The EMA is below. Pardon me. This white EMA is above the midpoint, and then the RSI is below the midpoint. And so this does have to get negotiated out. If you look back here, you can see that the white EMA, it just went sideways for a while, and then the green RSI had to build up a bottoming structure. And so that's why I'm looking for maybe one more push down, and then we catch up with the EMA. And this is a kind of a very typical pattern. And so the daily, again, is telling me it's not quite ready. And then I look at this thing and I can see, well, look, we had this push up here on the volatility that went with our price action. Then we had a flip, and this flip basically took us sideways. And then we started being pushed up again. Okay, and that has taken price action down. Let me see if I can get a vertical line on that. This flip right here, it was, well, maybe this one is sideways. Let me move this one over here. Yeah, maybe this is actually the flip that ended up taking us down. That was the push up, took us down, and now we actually did get that's actually a pretty reasonable signal for a mean reversion or continuation to the upside on the daily. So maybe volatility is giving us a clue, but then we have to double check, well, how's our volatility doing? Well, look, we're actually pushing down on the Stokes. So unless this thing bottoms out and crosses like this, or unless it, at least crosses, okay, even if it doesn't bottom out, if it has to at least cross, then I'm not going to be biased to the upside. It's not going to be biased up to the upside. And so let's go ahead and put our key levels on for the day. And while we do have this level that does suggest some hopefulness as a turnaround, um, in general, we're just going to be swimming around in the momentum pool all the way up to 30,335. But if we do capture 29,565, then there could be a chance that this volatility on the day ends up taking us, to higher levels. Okay, so I'm really looking for 29,565 500 to 30,000 for us to recapture if you want to go on that run. Now we hit as high as 31,000. We don't have to take that out, but we do have to get this area up here. So just keep that in mind. That's a long ways away. It's a lot of levels in between us that could potentially reject us. Now the neutral point of control is going to be 28,500. That's going to be a spot where we could get rejected from. We do have to hold above 27,255 if we don't want to continue to pushing in the direction of that downwards direction. Bears don't get control on the daily chart unless we're under 26,800, so we're doing okay. Just in kind of like a neutral area, a little bit bearish, gonna admit. We're on the bearish side of neutral, but bears are not in full control on the day. That's good news. The only bad news is that the daily volatility pivot is way up here at 29,560. It's a lot of work to get up there. It is possible. It is possible. Okay, you can also see the continuation line, okay? If we want this daily trend to the upside to continue to the upside, then we do need to get above that 29,500. So these two lines are backing each other up, and they're saying this is a critical area for us, okay? Very critical area. And then we could potentially get that squeeze to the upside, which you can see in the EMAs here. Okay, right now downside, but it's going to unfurl these, and we're going to be able to ride to the upside if we get above that 29, it's called 600 area. Let's go ahead and just take a look at some of our higher time frame lines, because it's been a while. The 2-week is actually going to close in 1 day and 4 hours, so it's a little bit jumping the gun here, but I do want to remind you of what the 2-week looks like, where we do have the 2-week volatility pivot at 25,700. And so if we do just dip down there, and get a wick down to that area, we'll take out some of this liquidity. We're not going to break any bullish structure. We're just going to basically retest the 21 EMA, which is pretty healthy, right? Retest the 10 EMA, which is pretty healthy. I use the 9. Some people use the 10. And, we'll be on the bullish side of the volatility pivot. Additionally, bears don't gain control until under that 13,000. We've got the 200 EMA on the 2-week all the way here at 14,000. We've got our general continuation above 20,000. So everything looks really good still, okay? As long as we don't lose 25,700, as long as we don't lose 25,000, I'm still not too worried about this. This could just be a back test on the 2-week that ends up faking everyone out, and then in like a day or so, somehow it just flips around, or maybe next week it just flips around, okay? So I'm not saying it will. It could continue. It's broken down into alpha momentum pool, and there is a tendency to get to the other side of the pool. That happens quite. That's why I designate the pool. There's a tendency to end up swimming to the other side of the pool, but it doesn't always happen. And the fact that our volatility pivot is in the middle of the pool, that's usually a blocker, okay? It usually ends up blocking or getting a bounce or some type of reaction. And so it's a good thing that could potentially save our butts. So we'll just see how this works out, okay? Guys, in a day or so, in a couple days, we can double check to see how the 2-week is going. It is a long period of time. But mostly, I just wanted to focus on the daily, just to show that we do have headwinds against us, but we are doing our job. Okay, we are doing our job to hold our momentum to the upside. We are doing that job. And then the 6-hour, although they totally lost control of the charts on the 6-hour, right? And bears are in control on the 6-hour. That the daily bulls are fighting, and they are trying to take back that really slender momentum pool. Right? We're like technically on top of it right here, and they want to try to push. Now, personally, I'd love to see a retest of this liquidity down here. Love to see some type of a W structure. It's going to be much more healthy to break through these EMAs if we could just do, some type of a choppiness like this, right? And just build some structure, right? Something, I don't know. It's just Just the LARP lines, they don't mean anything. Okay, like just build some structure and then pop up. I don't want to just go straight up and then straight back down. Okay, just some type of weird liquidity thing. I would rather build some structure and then get up there. And hopefully that's what ends up happening. Okay, guys, this was a little bit of a long episode. Sorry about that, getting back into the long episodes, but I do hope that you found it informative. Those are alpha for the day. Stay safe and happy trading.